afternoon and welcome to the Blue Line Metals Edge here for Friday, January 13th. I'm Phillip Streible, Chief Market Strategist at Blue Line Futures. If you haven't done so, go to our website, bluelinefutures.com, click on Research, sign up for a free 2-week trial of our research. You just put in your basic information, your contact information, select what reports you like to see. I really encourage you to check out all of them, look at a 2-week trial. And if you trade anything, any of the currencies, the softs, the metals, the energies, we've got all the bases covered here with the various reports. Now getting into the markets here, looking at next week and really breaking it down, we really don't have a whole lot. There's not a lot of driving catalysts. Remember Monday we're pretty much off for MLK Day, and then you go into some of the other countries. Bank of Japan, that statement outlook, that'll move the markets here. They've got a tentative time on it, so nothing concrete. They've got their expectations. See if they come out and they're a bit hawkish on their statement. And then you do have some CPI data, some of the inflation data globally. What I believe is going to happen, that it is going to come down, but it is going to remain elevated. I don't think that the Fed's going to get to their 2% mandate anytime soon. You push out into the week, you do have PPI for the U.S. here. That's going to be coming out. That's kind of really your only economic data that's inflation driven in the U.S. And then you're going to have that retail sales month over month. Expect a big decline. So even if you do get the spike up on inflation and you get the decline on the retail sales, I think it's going to end up being a wash. I looked at last December 9th when this data was released. Market didn't do too much. Looking at the performance data, you go to year to date, you're going to see that gold is doing real well. You also see it's up about 4.94%. On the week here, we're up about 2.4%. Click out of this. 2.4% on gold, 2.45. Silver gained a little bit over 1%. There was some disproportionate moves here. On the gold-silver ratio, it's been coming down. Gold has been performing a bit better than silver just recently. I believe that's due to kind of the deflationary environment we're in. We tend to see those industrial metals, they start to lag. If you look at things like, you go to platinum, for instance, it is in a bit of a correction right now. You go to silver, it's more of a sideways channel. This is a nice upward move, but you really want to see kind of a big breakout on the chart, something that's just, where we start to take off and we really go to the upside in order to get it, something where we're really moving up. $28, you get some short cover and you get some squeeze going to the upside. I don't think the participants are there right now in the silver market. I talked to a couple, coin dealers, things like that. They're just not seeing that big push in demand, and I think it's really because the individual, the consumer, is strained. They're seeing a lot of the inflationary data is hitting their pocketbooks. They're not having that disposable income to scoop up a lot of that physical, at least on the silver side. You get into gold, this should be flipping over to the April contract here. At least all the contracts we're trading going forward are going to be April. But you can see gold pushing up, 1918 on the charts. Looks really good. Stochastic's kind of moving up, MACD moving back up into that overbought territory, but nothing really too alarming at all. I think that what you're going to see is that any of the corrections we get on the precious metals in the near term are going to be really short-lived, and they'll be quite shallow. I was thinking on gold, somewhere around 1850 in this range is where I look to add some new positions on. Silver, I'm looking a little bit back towards, this lower end. I think we're a bit oversold, 23.50 down to 23.25. I think that's where you want to be a buyer. Copper, look at that angulation upwards. It looks really good. It's all hinging on a Chinese reopening, Chinese stimulus, Chinese recovery. So, that's the metal that really takes off. And if you go all the way back and you get to back when we were during those COVID days and those early days, that's when it bottomed right here. It was the first metal to bottom, and it took off. And if you see something where we get another bottoming in action over in China, you could see a massive move upwards back to $5 on copper. That'll drag silver up with it as well. It's just that I don't think silver is doing as well as it should be in this environment. Nothing I could do, nothing I could say different. I'm just observing the price point on it. You know, some of the other markets here, treasuries, if you look, that 10-year note has been, if you go to the daily, 10-year note has been pushing to the upside just recently, so we're back at the upper end of the boundary. That means that treasury yields are at the low end. So if we start to see treasury yields rise again, you're going to see that impact your gold market. All your other markets are going to kind of slow down a bit, and this will ease off. Your your financials, you'll get the S&P 500 doing real well. Running into this moving average, that's a 200-day moving average right now. The NASDAQ is a big lagger, could be signaling to another higher low. And then you go to, a lower high. The Dow's been doing really good, and also the Russell had triggered some logs on my system. So if you have any questions, futures option trading, give me a call, 312-858-7303. Remember, futures and option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.